Good morning, and thank you for joining us for the Latin Resources Investor Webinar. I'm Jane Morgan, and today we are joined by Managing Director, Chris Gale, and VP of Operations Americas, Tony Greenaway, who'll be providing a company update and engaging in a Q&A session. To ask a question throughout today's webinar, please use the Q&A function, which can be found at the bottom of your screen. Chris, I'll hand over to you.
Thanks, Jane, and good to see you, Tony. Thanks, everyone, for joining. This presentation is mainly on our recent MRE upgrade, which is now at 70.3 million tonne at 1.27%. Just a little bit of an update on the jurisdiction in which our projects are situated. Of course, Minas Gerais, one of the great mining jurisdictions in South America, and certainly the best mining jurisdiction in Brazil. We started this drilling back in February of 21. We announced our first JORC resource of 13 million tonne in December. That was upgraded to 45 million tonne in June. And now we've just announced a 70 million tonne JORC resource in December. So in a little over 20 months, we've built that from 0 to 70.3 million tonne. And it's a credit to Tony and his team, and such a great effort, and working so hard. Our team in Brazil, over 300 people on site, 14 rigs, another 2 coming. So we'll have 16 rigs churning away early next year. Just a reminder on Minas Gerais, it's a great mining state, over 300 operating mines, but you know, really presents and contributes a lot to Brazil's economy. Hydroback grid, so our plant, which is in the planning process now, will be backed by hydroelectricity at 3 cents a kilowatt hour. We'll be shipping out of the port of Ilhas, which is the largest bulk export port in Brazil. Our PEA, which was recently completed, we'll touch on the PEA of $3.6 billion MPV. We'll touch on that today. And we have brilliant infrastructure and sealed roads to site, and certainly at the port, dual highways all the way to port. So great jurisdiction, great deposit. Planning started for production, so we're very, very excited. With that, I'll hand you across to Tony, and he'll run through our new resource. Thank you.
Thanks for that, Chris. Yeah, look, it's really, really pleasing to put out another update on the Colina deposit. Upgrading, as Chris said, from our previous target or previous MRE, which was 45 million tonnes, but also importantly to put out our maiden resource on the Fogs Block prospect as well. So that coming into the deposit classification now. So we've been busy, as Chris said, for the last sort of 12 months. 10, 11, 12 rigs running around on site, and again the team out there at Salinas have done a fantastic job to get us to where we are now. So the upgrade that we've just done on Colina itself, 63.5 million tonnes at 1.3. The Fogs Block maiden resource, you can see there at just under 7 million tonnes at just on 1%. So combined with an exploration target range, SGS put a range on that of up to 18 million tonnes at a bit over 1% for Fogs Block. So that's a fantastic result for us. It's by no means the end of the story here. We've got a lot more drilling to do, and a lot more resource growth to come in the next sort of 6 to 12 months as we continue to drill this. We have always had the aspirations to get up around that 80 million tonne target, which is our view of a tier 1 project. And we now can very clearly see that it's right ahead of us. We've just got to do a bit more drilling to fill in Fogs Block, and we'll continue to grow. You can see in the image there that corridor that we've defined, and that's really becoming quite prevalent now in all the work that we do. Prospects like Planalto is another new prospect that we've just put one hole into. It's about 1.8 kilometres away from Colina itself. And whilst we don't have resources or any grades for that yet, we've intersected over 45 metres of pegmatite in that hole. So this corridor that we're sort of defining here is critical to this project. And we can clearly see our pathway through to a tier 1 project within that. And we'll now just continue to systematically go ahead and drill. So you can see the resource classifications here. We've got just under 2 million tonnes at 1.5% in the measured, 40 odd million tonnes at 1.4 and 30 odd million tonnes sitting in that inferred classification. And one of the really encouraging things for us, excuse me, with the infill drilling that we've done and the increasing in that measured resource was to see the grade jump quite significantly. We're up just under 1.5%, which is fantastic. And we're seeing that consistently across the work that we're doing. When we infill drill at Gale, we see a raise in the grade. We see consistency in the pegmatites itself. So the tonnages are remaining about the same, but we're seeing that significant lift in grade, which is really very encouraging for us. You get the footprint of Gale itself. You can see on the image there on the left-hand side at the bottom, it's grown to just on 2.5 kilometres long. That's still 1 kilometre wide within our corridor there, and extending off to the southwest. And importantly, in that image, you can see the Planalto prospect down in the sort of bottom left-hand corner. That's hole 233. This was a blind hole. There's no outcrop in that area. It's a completely subsurface geophysical anomaly that we tested there. We've got a very extensive structural database that shows us where the mineralization is, and that was a test of that, and it's come up trumps, which is fantastic. What it says to us in the exploration team is we've got a lot more to find here, and we've got a lot more work to do to continue to grow that resource. But really, as I said, importantly, seeing that lift in grade when we infill drill is really good for us. So our focus over the next sort of 2 to 3 months in beginning in the new year, as Chris said, we're going to have 16 rigs on site as of January. We'll be looking to infill that main area of resource that you can see there, to lift more of that into the indicated and measured, so that we can then convert that across into the reserves as part of the DFS process. And again, I expect to see that grade lifting again when we convert more of that indicated. So just keep an eye out for that. We think we're seeing those trends quite clearly now in our data sets, which is good. We will continue to grow the resource to the southwest. You can just see in the image at the top there, there's a couple of pegmatites that are sort of sitting out on their own. That's the start of what we believe is the next system along to the southwest of us. The Planalto prospect is right in the meat of that, where we've, as I said, intersected 45 metres of pegmatites in that hole. So lots more growth to come within that very close sort of footprint from Gale. As I said, Planalto is only just on 2 kilometres away. So very, very close, and really central to that hub where we'll look to build our process facility for the Gale deposit itself. Down at Fogs Block, this is an image that you can see there of the Fogs Block pegmatites. They're a little bit steeper dipping than they are at Gale. There you can see it's a little bit lower grade near surface. That's a weathering artifact. As we get down out of the weathering zone, we come into the normal grades, and you can see they're up there sort of around the 1 to 1.5%, which is again what we see up at Gale. So there's only 9 holes into that used for that resource, so very early days, but really good that we're able to get the maiden resource out for that. What it says about that prospect is SGS was very confident of the continuity of those pegmatites, so we're able to declare the maiden resource for that. But importantly, that exploration target range, they can see the upside for this prospect, and they're saying up to about 18 million tonnes there at 1%. So a bit more drilling to do to expand to that point, but we're confident we'll continue to grow that and add that into the resource base. A few sections you can see there's a long section at the top running from the northeast to the southwest. Again, there's a series of stacked pegmatites. At Gale itself, we've got 30 pegmatites that we're modelling. So all of those are individually modelled. They're still open at depth. These prospects or these pegmatites get thicker generally, and they get higher grade at depth. We're not going to chase it too much further down dip. All of that material you can see there at the moment is within an open cut scenario. So with a mine life already in the PEA of about 11 years, we're expecting that mine life to grow significantly. So a 20 plus look out. I don't really want to be chasing deep tonnes when we can find things like Planalto when it's a whole lot closer to surface. So that's our focus, is near surface, easily mineable tonnes, and we'll look to grow that over the next little while, as I say. You can see in the bottom right hand corner, just gone away there, the That's the Fogs block. You can see it's a little bit steeper there, still open at depth. These are, again, only very shallow holes, only intersected in 9 of the holes we put in there. So early days for that, but a lot more work to go. So this is I guess a 3D schematic that came out of the PEA. You can see the original mineralisation. That's our 45 million tonne resource depicted there. We've grown that obviously now to the southwest into that area of farmland that you can see. So that pit will change when we run this through the DFS process. But what's important to show there is that all of this is captured in one single open pit. So that makes mining logistics a little bit easier, dealing with one pit and only one pit. We don't have prospects spread, over, lots of areas. This one pit here will feed the mill that we're going to be building. The mine infrastructure, you can see there, has to move. Fortunately for us, the Planalto hole is right in the middle of that waste dump. So fantastic that it's nice and close to where the original mineralisation is, but it means we're going to have to shuffle some of that infrastructure. But that said, it was only preliminary at the time. So yeah, there's no issue in terms of scheduling or what have you there. But all of that work will now be redone effectively for the DFS, because we've got nearly double the amount of resources that'll go into the DFS process. So that'll change significantly where we do things.
Thanks, Tony. And as Jane said, we'll be fielding questions after this presentation. So our recently released PEA, 3.6 billion NPV, 132% IRR, 7-month payback, all sustaining costs of $536, 12 billion in life of mine revenue, 6.8 billion in free cash flow, 11-year mine life, the capex of $253 million. So a very compelling PEA. The nice thing that I want to emphasise now that we've grown the resource, that those numbers were built around a 27 million tonne production, the usage of the resource for production. So in other words, with the planned, or with the recent resource upgrade, our plan now is to take into stage 2 into our DFS, which effectively could double stage 1. So a little bit premature yet, but now that we have a resource, we're working on that DFS to actually allow stage 2. So phase 1 incorporated 405,000 tonne per annum for the first 3 years. And then phase 2 of stage 1 was going to 525,000 tonne per annum in year 411. So now we'll bring in stage 2 with this recent resource upgrade, which will increase the production levels. I think Tony mentioned earlier about being a tier 1 lithium deposit. We want to be a tier 1 lithium producer. And our view of that is the ability to produce 100,000 tonnes of LCE, or lithium carbon equivalent, per year for 20 years. So that means we need to produce between 750,000 and 850,000 tonnes per annum. And that's our goal by bringing in stage 2 into the DFS. So a little bit now on the timeline, on our milestones and where we're heading. So we've just had our upgrade into the second half of 23. We'll continue that drilling and continually upgrade that resource. We're heading for 100 million tonnes, which we're very excited about. Network DMS pilot work will continue. PEA is completed. The DFS we want completed by June next year, along with environmental and mining permit application. So once they are lodged, the ministerised government are committed to having an approval in 6 months. So hopefully by December of 24, we will have that approval for our commencement of construction. Our final investment decision will be made then, along with our financing in the second half of next year. Construction will commence of February, or first quarter of 25. We hope to complete that first quarter of 26, so 12-month build. Commissioning and ramping up, we want to be in full production by the second half of 26. So exciting times ahead for Latin Resources, and now moving from an exploration phase into a development phase as a company in soon-to-be production. A little bit outdated. We had a bit of a bump on Friday. well-deserved bump, I might say. On the 31st of August, we were admitted into the Morgan Stanley Capital Global Small Cap Index, which is a great effort by the company. And so currently we're about 650 million market cap. We have $60-odd million in the bank, so we're fully funded through the FID. Had some great institutional investors involved, and there's more coming in on the company now. The day we actually listed and got admitted onto the MSCI, BlackRock bought 27 million shares, are now a shareholder. So that's it for us. Jane, thank you.
Encourage webinar attendees to please use the Q&A function, which can be found at the bottom of your screen if you do have questions. Let me jump into them. So first one, is there an opportunity to expand on the current tenement package?
Sure. Look, we're always looking for new prospects and tenements in the area. As I said, we've got a very extensive structural database, and our understanding of the mineralising systems are very clear for us. So we're using that to look at targeting surrounding tenure when we can. A lot of this area now obviously is fairly tightly held, but there are certainly opportunities, and that's really come when you look at our regional tenement package. We've pegged a lot of ground up to the north of us. That was all open, free ground, so cheap entry price for us, which is great. And we pegged that on the basis of our structural understanding for the controls to mineralisation. So we're always looking for those areas that we can add to the tenement package. So yeah, in short, there is absolutely opportunity to grow the tenement package, and we have a regional exploration team of about half a dozen guys, some very good geos led by Bruno. They are always looking for new opportunities for us. So it's very much on the agenda.
Wonderful. Tony, I might stick with you for this one as well. So what's the all-in cost per tonne?
For the all-in sustaining cost is just under 530 odd bucks. That came out of the DFS. So built into that is contingency as well. There's also shipping costs through to China, so that's basically everything all in. So just over 530 bucks a tonne is our all-in sustaining cost for the PEA. That will obviously change through the DFS. We don't expect it to go up, but with a bigger resource, economics of scale and things like that, we'll see that change.
Thanks for that, Tony. So next one, is there a rough time frame on when the 2-tonne met testing is going to be released?
Again, I can field that one. So that test work is underway. So we've actually sent 3 tonnes of material. We got a little bit excited and sent as much as we can. You know what met guys are like. They always like more material. So we sent 3 tonnes. It's up here in Canada at SGS Lakefield at the moment. That includes a lot of some additional waste material as well. So we've got an extensive program going on. We're actually building the composites now in December. And we'll kick off that test work just after the Christmas break. And that'll include the normal DMS runs that we would normally do. We're going to dilute some ore down to what we think is run of mine, see how that goes. And we'll do some other bits and pieces as well, some ore sorting test work and some other bits and pieces around that. We expect that to take probably a couple of months. So it's always hard to tell exactly when it'll be available, but certainly in that first quarter, I would think, or around the end of that first quarter.
Wonderful. Chris, I might hand this one to you. Just a question on potential dividends in the future and if the company has any thoughts on that.
Well, I think if we got in the production first, we may look at it for sure. 8 billion of free cash flow. I'm sure there'll be some dividends flowing once we're in production, but that's a couple of years away as yet.
Wonderful. Next one. I understand that some consideration has been given to a US listing. Is that still on the agenda?
We've been talking to NASDAQ for some time now. It is a long process. At this stage, we're just in discussions. There's been no real push forward on a listing in the US as yet. I think for us, it's more about focusing on the DFS, and getting all our mining applications lodged before we consider listing in the US at this stage.
Wonderful. Couple of questions coming through just on our other projects. So is there any updates we can provide our webinar attendees with, particularly in Argentina?
Argentina is making some headway. We're just waiting for the final exploration permit to go out and start further exploration. Drilling permits have been lodged. So Argentina takes a little bit longer than places like Brazil. There's been a change of government there. So we're expecting now to be delayed by another few months once they change over due to obviously the elections. So it's still a focus, remembering that we're not operators there. Our JV partner are the operators. So we keep a close eye on that, but we hopefully over the next month or two, probably in the new year, we'll have some good news and start drilling.
Thank you, Chris. Tony, I'll go to you for this one. So compared to similar projects, how do you see these costs to production stacking up?
Sure. So the costs that we've put out were, as I said, were part of the PEA. And unlike a normal PEA, we haven't just plucked numbers and made sort of broad assumptions. We used as close as we could get to real costs. An example for that, we used production costs that came out of Sigma, our closest neighbour down to the south in production. We also used shipping costs and trucking costs that came from those guys as well, and the contractors that are physically moving their material for them. Power costs have come from the state government in Minas Gerais. So we're using as much as we can of real costs, which means it's conservative for a start, and B, we think it's very realistic. So, we should be able to sort of meet those. So from that perspective, they're very good. And obviously, given that we're using real costs coming out of a neighbour, they compare very well to the people that are around us. And similarly with the build costs and things like that, we've gone a little bit deeper than you would normally do for a PEA. And whilst we haven't, got quotes for materials, we certainly have contacted all of the suppliers for that to get more realistic figures for the for our construction costs as well. So we're not just sort of wildly plucking numbers out of the air.
Thank you, Tony. So next one that's popped up, with EV manufacturer BYD taking a presence in Brazil, has the sale of Latin Resources spodumene concentrate into Brazil been considered?
Yeah, thanks, Jane. Yes, BYD committed to spending $800 million US. They've just acquired the old Ford car manufacturing plant. They're converting that into EV. I believe there is discussions around a conversion plant for lithium hydroxide. As well, everyone knows BYD, excellent battery manufacturers as well. We'll keep an eye on it. We've had discussions with BYD in the past. As most of the investors know, we've started an offtake process. Macquarie Bank are handling that process for us. We had 25 on the list and we shortlisted down to 14. That closes off in the next week or so, the expression of interest. We will analyse those expression of interest, shortlist again in the new year and commence discussions on offtake. So it's going to depend really on those discussions and who we decide to go with, which is a good position to be in. The fascinating thing for me is the sentiment, the market sentiment, on lithium is quite poor at the moment, but we're not seeing any change in the demand. Like as I said, we had 25 in our room for an offtake agreement. And, of those 14, 8 or 9 are tier 1 battery manufacturers, car manufacturers, conversion type manufacturers. So it's just mind-boggling the difference between the market sentiment and what's really happening out there in the lithium world. There's a tremendous amount of demand, and for us, it's about getting a quality value-add offtake partner to help us take us through to production.
Thank you for that, Chris. You've answered a couple of the questions in that answer there. So let me keep going through. Will the next MRE be included into the DFS in June?
So yeah, I can certainly answer that one. So we will keep going with the updates for the exploration work that we're doing. Obviously, as I said, the next big chunk of work that we're doing in terms of drilling in the first part of next year is to really target Colina, the 63 million tonne resource we have there, and look to increase the JORC content of that, or the JORC classification of that, into measured and indicated. So we're looking at about 75 metre drill spacing to get into indicated. So I want to lift as much of that inferred material up into that classification, and we'll also convert a whole lot more across into measured as well. So that should be done in the first sort of 2 to 3 months of next year. So we'll then update the resource for that, so we can then we'll publish that again around that sort of time, and that will then flow into the DFS. So again, we can do reserve and reserve calculations. So we'll certainly update that for Colina itself, and we're going to continue to be exploring. So Fogs, and I just noticed a question on there about Fogs East. Simple answer to that is I like that area a lot. We have a lot of pegmatites outcropping down there, 5 or 6 of them that we've mapped so far. The more work we do down at Fogs and Fogs East, the more we find. So we'll certainly be drilling down there. So I'll look to expand that on the maiden resource for Fogs, hopefully to try and bring in some of the Fogs East area as well, because that certainly is, it's only 12 kilometres away from Colina itself, so easily truckable, or transporting that ore up into the Colina hub. So that is a big focus for us. So absolutely, we'll continue to upgrade the resource and provide those to the market as we go.
Thank you, Tony. Lots of questions coming through on just where we see the lithium price heading. I'm not sure if you've both got any comments on that.
Look, we get a lot of information from obviously benchmarks, fast markets, and a few other sources. The last lot of numbers I saw, which is about a week ago, showing lithium price futures increasing after June next year. So the future prices are lifting. I don't think that China can continue to hold such low stock as they do at the moment. This fallacy that there's been drop off in EV demand is a fallacy. The percentage of sales has dropped, but we've come off a really low base versus the amount of unit sales. BYD had their largest month ever in October. There's some numbers coming out now through GOP28 showing incredible amount of EVs being sold throughout the world, and that will continue, which will obviously increase demand. And I believe lift prices into the end of next year. The question is, Jane, does everyone think there's a bottom there at the moment? That's the big question, I think.
Absolutely. Tony, did you have anything to add? Sorry,
No, that's fine. Chris has pretty well said it all. That I leave those sort of questions to him. I'll talk about geology and rocks.
Well, I'll have this one to you then. So, are there any plans to drill at Salina South?
Yeah, absolutely. So Salina South has been on our radar for a long time. It's again within our structural corridor. We have some really high tenor soil anomalism down there. There's no outcrop in that area, but we certainly have soil anomalies down there that we do need to go and test. And unfortunately for Salina South, these other things keep popping up. And when I get pegmatites with spodumene in them outcropping, they're really tempting to go and drill those in advance. So poor old Salina South gets bumped down the list, but by no means it's a lesser target. It certainly is. But when we have really high quality outcropping pegmatites very close to our existing resources, I probably need to go and test those first. But yes, we will absolutely get down to Salina South. I was hoping to get there this year, but again, with everything else that sort of popped up, we got bumped off a bit further down the list. But it is still in my budget and will be drilled. So I know my regional guys are very keen to get down there. They've done a lot of really good work to build that up to drill ready status. So yes, we will be drilling that.
Thank you for that. Next one. So while much of the discussion has been around demand, has been EV based, how much interest have you seen from bulk bulk storage battery manufacturers. Struggling there a little bit.
Bulk storage battery manufacturers or electric storage systems. I think there'll be an incredible amount as solar panels obviously drop in prices, grants continue. We're going to see, I think, lots of growth, and we are seeing lots of growth in electric storage systems. Electricity prices aren't going, energy prices aren't going down, and I think people have just about had enough. So we're getting reasonable grants now for our solar panels, certainly here in this country. And we'll see, we will see a lot of growth in the energy storage system, which once again adds to that lithium demand model.
Wonderful, gentlemen. I think that looks like all the questions. I think maybe perhaps just to reiterate to investors, what should they be looking forward to from a news flow perspective over the next 3 to 6 months?
Sorry, Joe, I missed that.
Sorry, I just said if you can maybe reiterate to investors what they should be looking forward to from a news flow
Catalysts? Yeah. Look, I think over the next 6 months, we've got quite a few catalysts, as I mentioned in our timeline there. Next stage for us is the test work that will be coming out early next year. Through that, we'll have continuing with all the drilling Tony's doing. We'll continue to put out assays on drill core, followed by another upgrade heading towards that 100 million tonnes, and obviously our DFS. So it'll be more of the same that we saw this year. Increase of resource, assays, and of course the DFS, and more importantly for us is getting our development application lodged with our environmental permitting, which we're very, very focused on. We're building a great development team in Belo Horizonte in Brazil, and it's full steam ahead.
Wonderful. Well, gentlemen, I'm not sure if you can see any other questions. We've had quite a few come through. But otherwise, is there anything you can see that I've missed?
I think you've covered most of it there, Jane.
Well, look, thank you everyone for joining us for the Latin Resources Investor webinar. If I have missed any of your questions, please feel free to reach out via the contact details on the bottom of our ASX releases. But I want to thank you all for your time.
Great. Thanks for organising, Jane. Thanks, Tony. Thanks, everyone.
Thanks, everyone, for joining.
Merry Christmas. Have a great break. Thank you. Happy holidays.